Good afternoon, everybody, and welcome to Live Market Analysis Macro Edition. What does macro mean? Well, it's indices, commodities, foreign exchange, crypto, bonds, any of the big picture stuff that no doubt is impacting your portfolio as we speak. All of this and more after we do a little bit of housekeeping, which is pretty simple. Over to you. It's your questions versus my analysis. You've got a chat window there on Zoom. You also have the ability, whether you're watching on any of the streaming services, YouTube, Facebook, Twitter, or LinkedIn, to send me a question as well. I'll do my best to get to everybody's requests over the course of the presentation. Going ahead over to the charts, which is where I tend to spend most of these sessions. Colin first in today, asking for a look at the US dollar index. Certainly a fascinating chart at the moment, fascinating series of events that are unfolding with respect to the debt ceiling, with respect to a possible Fed pause coming up. So we had three speakers overnight starting to at least float this idea that the Fed will pause, scratch a line through the pause, skip a meeting in terms of their rate hikes, because I can't remember his first name, but I know his last name is Jefferson. And I'm pretty sure he's the deputy. I should know his first name, deputy head of the Fed. I'm pretty sure, correct me if I'm wrong, but I do know what he said. He said, I don't like the word pause. He said, I think the word skip is more appropriate. And I did tweet this morning. I said, how the hell is a skip not a pause? I mean, to skip a meeting means you've got to pause, even if it's only temporarily. But let's not talk semantics here. Let's talk about the US dollar index, which appears to be bucking a little bit of a trend that we had identified. I mean, certainly through here, right? We were thinking downtrend, and I might actually skip over to here. So I know I've got some scratchings on there. And sorry about that, but I should remember where my scratchings are. There we go. There's the scratchings. 100.82, 100.78, the two swing lows there. And we pushed off that. There was, obviously, we started to talk about this debt ceiling, which flight to safety, perversely, if the US is going to default, then surely the US dollar shouldn't get stronger, but it is. I mean, that's partly one of the reasons. The other major item there is the increase in US short-term rates. And I think that's the major catalyst for what we've seen. And that has come, as I've said in the past, due to an unwinding of expectations that we'll get rate cuts this year. So the market, there was such a big disconnect between where the Fed is and where market rates were. The market had to catch up. Either the Fed was going to cut rates and catch up to the market, or the market was going to catch up to the Fed, realizing that the Fed will stay the course. And for once, and I'm going to say, when was the last time that happened? I've been watching markets in November, it'll be 30 years now. And it doesn't happen very often where the market doesn't get what it wants from the Fed. So we've seen some strength in the US dollar index, and just from a technical perspective, look, it's hard to say from a chart like this that there should be support or resistance at any level, because it's an amalgam of what's happening on the EUR USD, the GBP USD, the USD USD JPY, the AUD USD, the USD CHF, the USD MXN, and so on and so forth. But often, as you can see there, 100.78 versus 100.82, it tends to happen self-reinforcing, because people look at charts and say, well, that's where I should be getting out of my trades, if I'm long or I'm short. So watching that level, 105.88, and as we get into that level, probably looking for the candles that confirm. And we are already seeing a little bit of supply, I think, in here, but not enough really to call a turnaround on that and say, we're expecting a bout of US dollar weakness. I think if you do see some candles that kind of resemble that around here, maybe there's a bit more to go, 105, then I think you can start planning. But look, not even there. I mean, it could be here. We could get a lower peak, and that would just confirm for me what I believe is that we at some stage will tend to trend it down. But is it tradable? Certainly, you can trade the US dollar index with us. So to prove that, I will head over here just for an instant, I promise, but just to show you how to find it. And I'm not sure if it's in my watch list there, but you can go US dollar index. Well, there's all the index, there it is, USD index, okay, and that gives you the ability literally to trade that. And if you're not sure how it works, well, you just select your risk per pip, and you do it in this box here by clicking this button up. If you want to take more risk for each pip the US dollar index moves, or you want to take less risk, and the pip obviously value here is 15 cents Australian. If you're wondering what the pip is, it's standard across our platform that it is the rightmost of the enlarged numbers. You can see here 8 and 3 are enlarged, and therefore 3 being the rightmost of those enlarged numbers is the pip value. So if 3 goes to 4, your profit is 15 cents if you're long. If 3 goes to 2 and you're long, your loss is 15 cents. I think it's pretty straightforward. And then you can start to work out some targets based upon where you think it might get to. And let's say we were going to fade this. So we're saying, oh, Carl saw some shadows in there, there's a bit of supply, and I think actually now I can go short. So if we click on the sell button, let's use a market order for now. We'd say, well, I can set my stop loss sort of somewhere up here at 105.76. You can see that's safely above this major peak here and this major peak. And I think probably heading back down to say a 100, and I won't try and get out on the dot there, but you know, if we knock the 101 figure, the round number there, there's going to be some stops triggered, and it could get down to say an 87, or maybe let's not be that optimistic, a 91 or a 92 quite easily. And they're telling me they're invalid values for some reason, not sure why. Look, if I spent an hour looking at it, I'm sure I could find it, but I can't see. Because I've got them the other way around. I'm going short, aren't I? So my profit, this is very important, rookie mistake. If I'm going short, I want it to go down. So my profit is at the lower of the two numbers, 100.92, and my stop loss will be at the higher of the numbers. I don't want it to go up if I'm going short. And I said that was 105.76. And what we can see on the screen, remember I talk a lot about, oh, can you make one-to-one at least? And by using this sort of a platform, we can see visually, I think it's really neat actually. We can see what our risk is up to the red line and our target's down to the green line. We can see actually we can get more than one-to-one. So I don't think that's a terrible trade. For me personally, I want to see a little bit more of a sign that supplies in the market. And it tells you here, look, I'm risking $30, all of $30 to make 44. And I think everybody listening, if they wanted to do the trade, could probably afford something like that. And that's really the wonder and the benefit of using CFDs. You can take really, really small bets. Everybody says, oh, CFDs, they're risky. Is there anything I just showed you there that's risky? Tell me what was risky about what I just showed you. It's just nonsensical. People that just bang desks and shout from a position of utter ignorance. One of my pet peeves. I do want to show you some other charts while I'm here. None the least is going to be this one, which will appear magically in front of your eyes when I click the right button on OBS, which is my broadcasting software. Is the US 2-year yields, and we can see that the US dollar index, that rally coincides, lo and behold, with a move up here. And ladies and gentlemen, if you are thinking about trading Forex, and I certainly recommend you at least take the steps to learn how to do it. It's in a market that trades 24/7. You can get on here and click your daily charts and go to 5-minute charts if you want to. I mean, if you've got nothing else better to do with your time, but they're unlimited opportunity. And you can trade very small sizes up to very big sizes, like we just saw on the US dollar index. But Forex moves. If you want to, what's Forex all about? Forex is simply about rates, about relative rates. It's all about yields. And the higher the yield for a particular currency compared to other currencies, the more demand there will be for that currency over those other currencies. And up US 2s went, and so followed the US dollar index. So it should give you some scope and some what's the right word? Perspective on how to view your currency trades. I'm sure we'll get lots of currency trades today. What I want to do is just to confirm a few things for you. Now, this here is the Federal Reserve Meeting Probabilities. And what's important about what we're seeing, this one is from yesterday. Let me go forward to today. So this is the one I took the snapshot this morning. This is from CME Group, the big futures exchange. That's the word I'm looking for in the US. And what we're seeing here are the probabilities for the upcoming Fed meetings, whether we've got Looking down here, perhaps ease, no change, and hike. And it's a little bit more complicated up here. So let's head down here, look down here. It's all simplified for us. So we've got no change there at 73% now versus a hike of obviously 26%, and no chance of an ease in the June meeting coming up very, very soon. And if we go back to just yesterday, not kidding, this is how much and how fluid and dynamic the situation is with US interest rates at the moment, and therefore with markets. A lot of it's to do with the debt ceiling, of course. A lot of it's to do with Fed speak. And we're seeing the debt ceiling passed at least through the House of Representatives this morning. But we are seeing, look at that, that's amazing. I don't think I've ever seen such a huge shift outside of just a horrific print in, say, a CPI number or something like that. But just, it's really very political, isn't it? US Fed speakers and US politics. So no change goes from 73% today. Yesterday, no change was 33%. And yesterday, a hike was, 67, 2/3 probability of a hike today down to a quarter. So that is significant. What we do notice though, however, and this is why rates have been moving the way they have been moving, is if you look out throughout the rest of the year, you can see sort of September, November, December, not that much change. So a dramatic drop in thinking in terms of probability of Fed hike in June, but fairly stable throughout the rest of the year, which really just, for me, reinforces everything I've been banging on about for not days, but weeks now in these sessions, and obviously in the media as well, just simply saying that, hey, the market has had to play some catch up between where the Fed is. The Fed's up here, don't forget, the Fed, there's the Fed, right? And the market was down here. And they couldn't stay that far apart. Either the Fed had to come down to the market, or the market had to go to the Fed. There's, I know, an old saying about Muhammad and the mountain there. I think we've covered a lot of stuff, actually. So I know people want some questions answered about stuff to trade. So let's get on to that. It'll certainly frame all of our discussions. Buzz Lightyear looking at Bitcoin. So we've seen, look, just while we've got this, it's relevant. We've seen the last couple of sessions, however, rates have pulled back. That's going to help gold. Doesn't have a yield. It's going to help Bitcoin as well. Okay, so let's head over to the Bitcoin chart. I may have to make a couple of adjustments here to find it, but there we go. It's actually annoying. Here I was. Look, I own Bitcoin. I don't, but honestly, I don't necessarily look at the chart every day because I'm hodling and nothing is really going on. You can see the sideways trend. But honestly, I thought with those two down candles on the US yields that we'd see a couple of up candles on Bitcoin, and we're just not. So that's even worse. Short-term trend you can see there is neutral, but getting worse. The long-term trend is still up, thankfully, but really that's the only thing going for Bitcoin at this point in time. And again, I'm putting aside all of the talk, the chatter on the social media about everything to do with Bitcoin. And that's your choice, whether you believe all that stuff, because for me it's all noise, or you believe what people are actually doing with their hard-earned cash. And they're not exactly converting fiat into ones and zeros here at a rate of knots. So I would be, at best, neutral on Bitcoin. At worst, bearish, given the current last four candles. But respecting that there is going to be probably continued demand, excess demand in that region around 25.8, where we've had two substantial little bounces from the past. And it also is very close to an area of previous resistance. And there's no doubt that that is why this area is acting as an area of demand. Plus, we've got the benefit, obviously, the dynamic demand that the long-term trend should afford us. But I can say with confidence, if we start to close beneath those levels, particularly with big black candles, it's not looking good for Bitcoin at all. Do you want to play the game of selling some here and trying to buy it back on a wipeout through that level? I don't know if the wipeout's going to occur. Would I buy it here? So I think sell's off the table. Would I buy it here? No. I've just given you 10 reasons why I can't buy it here. And again, many people say, Carl, Bitcoin, you've got to get on board. Hey, I'm on board. You know, I've been on board for at least a couple of years now. But man, this is a frustrating ride for me. And no doubt for you as well, if you are a hodler, true believer. Let's have a look at gold now, because that's a natural place to go, I think, from looking at interest rates, for looking at the US dollar index, and looking at Bitcoin. So let's head over to the yellow metal, which if I go down to my metal section here, will be somewhere down the bottom of the list, XAUUSD, which stands for the spot gold price. And, you know, I've been pretty, bearish is not the right word, I think just realistic about the prospects for gold in calling sells on it. Sells are not even the right word. Again, it's a trimming alongside exposure, respecting the fact that the trend appeared to have been turning. I think I've nailed it. I don't think I've nailed it. I know I've nailed it. Everything I've said has come to fruition, and I called it so early as literally that black candle there. Okay, so I don't think I could have called it any better for you. I don't think this is enough of a bounce to get too excited yet, and last night's candle is disturbing also. So if I copy and paste that red arrow and put it there, I think it does demonstrate excess supply, and I think it demonstrates a somewhat of a feebleness on the demand side for gold, and I guess a resilience from the supply side, who are looking, I suggest, at this point of supply area here as an area where they might think about supplying again. Okay, so until we close above that point of supply, and I'll give you a number. This is 1984.99, so let's call it 1985, and we want to ideally see a close above that level with a big white candle, because it is the big white candle, ladies and gentlemen, that tells us that, remember I talked about how timid I feel demand is. Big white candles are not timid demand. Big white candles, if this starts to behave itself and changes into a big white candle magically in front of your eyes, it's about to occur. There we go. So big white candles are not timidness from the demand side. They are absolute assertiveness from the demand side. And if anything, an absence of supply, not timidness from supply, but an absence of supply. And that's the confidence. Think about what I said, just total assertiveness from the demand side and just absence from the supply side. Those conditions, I keep saying those sentences. If you're watching on YouTube X post, they're the two most important sentences I'm going to say today or ever tell you. You want to be long when there is just nothing but certainty from the demand side that it's a good time to be in, and just total confidence from the supply side. They don't want to be out. And that's when I start to become more positive on gold. I would even say, if I saw that, given the long-term trend, I could quite happily plus a third at that level. I'm going to be so bold as to say plus 1/3 if... Now, I'm going to have to delete all this if I put this on AusBiz, but if we see the candle, right. Until then, neutral. I said I'm not shorting gold. I'm not so bearish as short gold. Why? Because the long-term trend is still up. But I think neutral is the place to be on that one. Can you trade gold with the ThinkMarkets trading platform? Of course you can. It's one of our most popular products, let me assure you. And it will be in my watch list there, XAUUSD. And we've got silver and platinum, I want to say, as well in the precious metal space. But very easy. Just go through the methodology I showed you before to work out what your minimum exposure could be and then dial it up from there. And again, here's your PIP. Here's your rightmost enlarged number. And for each 1 cent US dollars per ounce gold moves, you're making or losing that 15 cents. You can see it moves, doesn't it? It can really move. And I think that's exciting about gold, but also, you need to be able to manage your risk. And that's what those take profit levels and stop losses are there for as well. Okay, let's get to the next suggestion here, which is from Perry asking about some currency pairs. Let's head back. Sorry for the jumping around, but I've got different things in different places. And we're going to go to futures and Forex list. And we might just zoom out a little bit before I get there, because I want to make sure I've got enough data on screen. I'm going to scroll down for Perry on the GBPAUD, which I think is one of the better longs out there. What a great trend. I think you stick with it if you're on it. Could I jump into the trend right now? Look, I don't see why not. There's a little bit of an upper shadow from last night's candle. Now, this is a fresh candle that has started here after the New York 5 p.m. close. So we're into the next candle. So we discount this last candle and only focus on the second from last candle, which I'm calling yesterday, which it is. A little bit of supply there, but I don't think this much supply is enough to be concerned about when you've got this much demand. Okay, put it into perspective. So happy holder for longs. Look, if you wanted to add a third, no objections. You might want to wait for a slight lower shadow just to start to be put in today's candle even, and then do it as it's rotating back. Maybe it's just a watch and see. But Perry, you can do this if you want to pinpoint your entry. So even as a daily trader, if you've got the time to do this, if you want to pinpoint your entry within a daily candle, you could go to a lower periodicity and find the stuff that I'd like to see in that lower periodicity to nail your daily candle entry, and then monitor it based upon your daily chart. So I've just picked 15. It is a time frame I like to use, and I wouldn't exactly be jumping at it just based upon that. And don't go then and try and find another one which helps you make your case. Okay, don't do that. Just pick one intraday that you can monitor. So if you're working during the day, you can check something every 15 minutes. That's fine. If you can check it every hour, maybe that's the way you go. Okay, but don't flip around to just try and find and make that trade work. I'm going to head back to the daily periodicity here. You do everything I'm doing here. You can do it on the ThinkTrader platform. It's just easier for me to draw in here. That's why I'm here and not there. GBPNZD, which is doing a very similar sort of thing. In fact, probably even looks better. Last week, I'm pretty sure, go check the tapes, I saw that big white candle. And you know what I do when I see big white candles? I say buy, not sell. I was just watching some media. I have a TV up here and it plays all day. And I heard someone say that, when something goes up a lot, it's really hard to buy it. And I agree. I think that's a really valid and sensible statement. It's a really valid and sensible way to feel. When something goes up a lot, it is really hard to buy it. And you need to detune that. For me, I see a big white candle and you all know what I say. I just want to buy it. There's only one thing I want to do is buy it. Why? Because I like to think with the market. Yes, I go with the herd. Sometimes that doesn't work out, but that's why we have stop losses. That's why we have limited risk. That's why we scale in, and that's why we scale out. Okay. Happy to stick with that one, Perry. I hope you got on it last week, and I hope you're making a bunch of money as a result. Well done. Happy holder. There's no black candles there yet, Perry. No upper shadows really to worry about, so that can continue. Look, while I'm here looking at FX, and I want everybody to take this seriously. Don't just tune out and wait for me to talk about lithium. I know who you are, waiting for me to talk about lithium. There are trades here, all right? Snap out of the thinking that you can only trade Aussie shares. I think this is a really bearish looking chart. And if it was a stock, we'd be looking to short it. But a bunch of, I thought that would look better, actually. I haven't looked at that one for a while. Sterling's the way to go. I mean, the thing about the sterling, of course, is their inflation is out of control, ladies and gentlemen. It's a small-ish, and I know a few of the POMs are raging against me for saying that, but a smallish economy, very open, given their proximity to Europe and even the US, but an open and small economy, and they are unfortunately price takers. They don't produce a lot of iron ore or copper or wool or grains like we do here in Australia. So when stuff goes up, they really are quite helpless, and it does mean probably that rates over there are going to be higher for longer, and therefore, our Fed, they're weak as water in comparison, aren't they? Our Fed, our central bank, our RBA. So probably the sterling crosses versus the Aussie and the New Zealand are the way to go. And even I suspect that's a very good chart there as well, because Bank of Japan are still doves. That hasn't changed. So that's look at that. What a great trend. We that's what we're trying to do here, is find great trends, aren't we? And take sensible risks on those trends, because we've got the probability of the trend helping us out. But it's just awesome. Thank you for that, Perry. Wonderful. Carlo asking for copper. Let us head over to that chart now. And I know plenty of copper bulls, copper hopefuls out there. I think they're more hopefuls than bulls now. I think they started out as bulls, but now they're just hoping for the best. Let's find it. There we go. Look, we've talked about shorting copper. I think down here we're pretty happy. We've since our last update, it hasn't gone the right way, has it? It's seemed to have moved higher, and we're starting to get a little bit of a higher peak here. So look, heads up if you did take that short. Maybe you're trailing a stop loss. I reckon, look, if you're a bit conservative, sort of a 385.20 as a stop loss. If you want more of a break-even stop loss, maybe a 380.30 or 380.36 sort of stop loss. And I think just leave it as that at that. But understand we are starting to see some higher peaks and higher troughs appearing. I'm going to clone that one, and this is where I try and draw. I try and draw in here. I'm going to do my best. As you know, I'm pretty nifty with my drawing in AMI Broker, but not as nifty here. So let me try to draw this. I think you know where I'm going with it. Is the higher peak, the high trough that has come in, and we don't know where the next peak is going to form. Okay, because this short-term trend is still building. Okay, but we do certainly have a higher point of demand. Let me copy that one, paste it down here. Okay, let's go allow. I'm not sure what happened then. There we go. And we're going to change that to, maybe I double click on it. There we go. A pod. Okay, and paste that one over here. So we do have our rising pods. So heads up, plus the big white candle in here means that potentially there is some excess demand coming into the system. And if you're short, you shouldn't ignore that, okay? And that's why we're looking to potentially trail stops. So would I buy it here? Carl's saying, hey, look, maybe there's some demand coming in. Maybe I should go buy copper. No, that's not me. Why? Because the short-term trend is still very much established to the downside, and I don't want to fight that. That's not my style. And the long-term trend is also heading down as well. So probably we've got a bounce that will take us in to test some of these supply areas around here. And then probability suggests we'll see continuation to the downside. Hey, anything can happen. I don't know the future. And that's why we read these charts and we make sensible decisions about what we can see, not about what we think. Harachi saying there's a path tool on TradingView. Hope this helps. I will look into that one. Not now, because I'm sure I'm going to stuff it up if I try to do it now, but I'll check that out, Harachi. And let's head over here to Forex versus maroons. Okay, well, I don't have a chart on that one, but I suspect, and this is me being a sand groper here, Buzz Lightyear. So by default, I have no idea about rugby league. But if I do follow Mathan, Somerson Durham, and I know he's tweeted yesterday about how Queensland seems to always win. So I'm guessing based upon trends, you would back the Maroons. That's what I'm saying. But I'm totally admitting my ignorance in that matter. Hi, Carl. Can I get out of the fetal position after your last uranium rant, or am I back to bed? Ross and Josephine, could be either Ross or Josephine speaking. Let's have a look at the uranium chart. But it's like, there's nothing wrong with the uranium chart. It keeps doing the right thing. I mean, what's our update here? This is the 31st of May. Look at that, a little bit higher than, look, it's going in the right direction. That's the spot price. So where's the problem there? But when we look at uranium stocks, at least Aussie uranium stocks, we got stuff like Paladin going on. And yeah, there's a disconnect. Boss still looks good. I know it was down yesterday, and I know we are not supposed to talk about this stuff on Thursday. But you know, Ross is a big supporter of live market analysis. I just want to go here. It's not too bad today, is it? So that's probably going to get a bunch of money that was in Paladin. I think that's the only one you can trade. So, well, it depends if you're in the fetal position because you've got all the other ones. So I think that's the only half decent one out there at this moment. But the uranium chart itself looks fine. Okay, let us keep moving. Another stock we're not supposed to talk about. Surprised that PLS isn't included in the ThinkMarkets tradable share CFD as well. I object to that statement because I'm sure it is. I bet you it is. This is from Chich FM. PLS, which is Pilbara. What? No. Pilbara. No, that's impossible. Well, you got me. You got me on that. It's ridiculous. It's crazy. That will change. Watch this space. I'm going to get that. Khan, are you online? Khan, here he is. Mate, we need to get Pilbara on. How do we not have Pilbara Minerals? One of the most traded lithium stocks. You and I will be on that straight after this presentation, and no doubt it'll be up there very soon. Okay, let's keep moving. US dollar from Neil. Neil, you might have tuned in late. I did a huge bit on the US dollar at the start. It's strong, but we are seeing some signs of supply coming in, and we're watching for those signs of excess supply to build. And maybe there's a short trade in the offing, but I still think it's early. Saying there's probably an anomaly. That is weird. He's saying every other lithium stock is there. Okay, my mind is officially blown. And Jackie chiming in with BKY, which is another stock which we're not supposed to talk about, is also, I did notice that as well. So these guys have the Spanish uranium mine that, what did they get a pop on the Paladin news? But Spain is better than Namibia. Hey, unless the Spanish municipality that is blocking them from proceeding has somehow done backflip, which I'm not aware of, why did they get a pop? Jackie might be able to tell me. Okay, let's go back to, I don't have a lot of requests here for the other stuff, so I will do what I tend to do at this point in time and go to the good old lithium. And we're seeing a little bit of a drop back there, only mildly speaking, just on lithium carbonate, and that is weird. What's going on there? That says 24th of the 8th, 2023, which is great because we're now seeing into the future. And you can see I've got some issues on my data provider. So let's discount that is where it's going to be in August, okay? And say that the last number, which is that one, is correct. And it's not a little dip then, it's actually heading back up, and I'll double check with the data provider what the hell's going on there. But otherwise, still bouncing. We can see it is moderating in terms of its appreciation. So clearly there is some supply coming in. If you were of the thinking that lithium was going to go straight back up to those highs, I think you are kidding yourself. Inevitably, and I said this, that supply would come in. I thought it might come in a little bit higher around here, but it seems that we are there. Not to say that we're going to drop back down. I have said in the past, we'll probably just hold here for a while. If anything, you might see a period something like this, or something like this, or something like this. And then I think that the next move is the move. That's the one you want to tune in for, and it'll be the decisive move. It'll either make or break your lithium companies. Okay, you will be hero or zero on the next move, but we're not there yet. I think we've got a period of sideways movement, and lithium hydroxide is the other one, which is flattening out, as I suggested it might do, and ditto for that one. But nothing to panic about if you're watching your lithium stocks not having such a good time over the last couple of weeks, which is what we talk about on Tuesday, isn't it? It hasn't come from any weakness necessarily in the lithium minerals price. And I'm looking down my other screen here, and I can see lithium is not having a great day today at all. But there's nothing that I can see in those lithium minerals charts to suggest. But don't forget, stocks don't always move on the commodities. They move on the expectations of earnings. And there's a bunch of other stuff going on there. In fact, why don't we continue in this vein and have a look at some of these what I think are the key macro themes at the moment. And I think we'll head back here. I think the most obvious place to go is to China. So let's head over to China and try and understand. We obviously had some really poor data out during the week on their manufacturing sector, which continues to contract. That's the SSEC, the Shanghai Composite Index. And you can see there that as the data has progressively gotten worse, so has their stock market, no surprise. We are showing a short-term downtrend now. That's disturbing. And we have broken beneath the long-term trend ribbon, which was perfect, as usual, in showing where we should find dynamic demand. But beneath that, we are in trouble, and we are going to probably see dynamic supply there. Hey, look, a pretty good candle here, and that is actually a live candle, so that's what's happening as we speak. If we can get a nice high close, maybe there's a chance to move higher. It's all going to be, don't just assume this is going down though, by the way, because this is a made market. This is all about what Beijing wants to do and where they want to guide the economy, and they want to guide it to less debt funded, more reliable, sustainable growth, okay? So don't just assume they're going to just put their foot down and just pump the Chinese economy. That is, they will not do that. They won't let it go into the toilet either, but don't expect, oh, look, commodities are going to be great because China will put the foot on the accelerator. Anybody who says that just doesn't understand what's happening, what the Chinese government really wants them to do. And they're okay taking a bit of, not even short term, they don't deal in short term. medium-term pain, having growth rates around 5%, which is still a very good growth rate, but they need to dial down the obscene indebtedness of their states and local municipalities, many of which are absolute just zombie organisations at this point in time. So any foot on the pedal would only exacerbate that situation. So it does, for me, make me think that commodity prices could be subdued for some time. These are the shares that Chinese people can buy or sell, or only Chinese people can buy or sell, and that's worse. And that always worries me when there's a disconnect between your international funds who have capital coming in all the time, let's face it, and that capital comes in, needs to go out based upon a spreadsheet, and the spreadsheet has the allocations. And X amount must be allocated to China. Why must X amount be allocated to China? Well, I think you just thought about it for 4 seconds and answered your own question. Of course, you have to allocate to China. So that money keeps ticking in from international global investors, and it tends to hold this one up better in a bad situation than this one, because the Chinese people, they're telling you that stocks are not a great place to be, or Chinese mainland stocks are not a great place to be. And then if we look at some of the property sub-indices, well, they have really fallen off a cliff. And we've seen really only a meager and meek bounce here. And it tells you that really the problem with the Chinese economy is not the average consumer. It's really still the indebtedness of the property sector, and that's the Heng Seng Mainland Properties Index. And those are the two main property indices there. The Heng Seng is telling you that as well. Got a bunch of property developers in that index also. And then we go to do the opposite. We hit the Nikkei, which still looks quite good. I think we've probably seen an intermediate top here for Nikkei bulls, and we had one coming. I can't remember who it was, but I reckon it was this candle here. And I called it a buy. I said plus 1/3. If you don't believe me, I'm pretty sure it's still on one of these indices charts here. Anyway, you believe me. I was going to try and find an AMI broker. But if you did get onto that trade, I think you're taking some profits here. And if you don't know how to trade the Nikkei, well, you really should know how to trade it, because it is as simple as going in here and clicking on the it's not on my watch list that's looking for it there, but if we go to N225, I want to say there it is, Japan JPN 225, and you could trade that one as well. Not to say that we're going to trade it right now, but certainly wouldn't have been hard to knock out, even at the smallest risk level, $40-50 on that trade with very little risk. Okay, how are we going for requests here? Iron ore, good place to go. That's from Colin. And Colin, of course, we're going to look at iron ore after we talk about China. So let's head over here. And I've got that chart here. And let me change that to, let me look at it here. It's probably the quickest way to do it. There we go. And make sure I've got the last starter there, 31st of May. I do indeed. A lot of people look at the US dollar price. I like to look at this one. I like to go to the source and look at the price in Shanghai. And we are seeing there a well-established downtrend. The long-term trend, in fact, has changed. I will note that seasonally, this is not a great time of the year for iron ore, and that extends through really sort of to October, November, December, which tend to be really, really good months. And there's nothing here. And it is a hugely seasonal price here because it depends on when factories open and close, stock and destock. But we know we can also look at steel profitability of steel companies, Chinese steel companies as well, and that's way down. So I can't see any catalyst there from the technicals to suggest that from a fundamental perspective, the fund managers are coming in to buy up iron ore at these quote unquote depressed prices. If anything, there's scope probably for prices to depress somewhat further. Okay. The trends are telling me that I need to be long iron ore, and you can extrapolate that out to your iron ore companies, BHP, Rio, Fortescue, et al. Allchem, okay, apparently we need to put Allchem on the platform as well. And if there's stuff you want added, look, this is a great forum to do it. I mean, I'm certainly got a conduit to the ThinkMarkets powers that be, so you can certainly do that here, or you can get in touch with Khan or Nick, the two key players there. Okay, I think I've got them all, unless there's another question on the macro. I've got one here coming from SC Python for Palantir. Hey, SC Python, tune in tomorrow where I will 100% talk about Palantir and BKN for entries. I'm not sure, Neil. What's BKN? Just expand on that one, Neil. I know Neil knows why we're here. We're looking at macro. What's BKN? It's not a stock, is it? But we're not doing that. And I'm wasting time here. So I don't want to waste any more time on talking about stocks or US stocks. We'll do those in other sessions. This is about macro. I think we're done. So let us head over here then and say to everybody who tuned in today, thanks for attending. Get your macro questions answered on Thursdays. Get your ASX equities questions answered on Tuesdays. And get your USA stocks questions answered on Fridays. You can register at www.thinkmarkets.com/AU webinars if you prefer to do it that way. You're always welcome to watch me on any of the streaming services. Why Think Markets? Well, we just saw a number of demonstrations on how flexible, how practical, how wonderful our trading platform is, how easy it is to trade really anything from around the world. You can also, of course, trade those boring old Aussie shares for $8 flat rate, CHESS sponsored. But we've got over 4,000 CFD products, and we actually have CFDs on Aussie shares as well, and you can trade those commission free. So here I'm thinking, oh, well, somebody's got a cheaper rate than Think Markets, or they're at $3, or they're at $5. Trade them commission free, just use a CFD. I've just showed you how easy it is to manage your risk with CFDs. I've dispelled this myth that CFDs are some evil, risky instrument. And as we say, let's say the carpenter goes and takes off 3 of his fingers. Okay, you don't blame the saw for the carpenter's mishap. The carpenter should have been paying more attention. Hey, if you do lose money on CFDs, don't blame the CFD. It's too easy to do that. And I think, dare I say, some people have latched on to CFDs as to blame for their own mistakes. But we're smarter than that. So head to www.thinkmarkets.com/U and open a CFD account now. Award-winning broker, that's us. Easy to use platforms. We've seen that. World-class trading apps and dedicated account managers like Khan and Nick to look after you 24/7. If you're watching me on any of the streaming services, please hit the subscribe button to stay notified of any of my future updates, and hit the thumbs up button. Very important you do that to let me know you like what I'm doing, so I continue to do more of it. Apart from that, it has been an absolute pleasure chatting with you today. All the best for your trading. Until we catch up again, bye-bye for now. Before you run away, don't forget that everything we've discussed today is general in nature. It has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general advice, please consider it carefully or seek the help of a financial professional. You can learn everything you need to know about Think Markets by heading to our website and downloading our product disclosure statement.